I like it. I like it.
Hello, good afternoon or good morning or good evening to everyone who is listening to us. It is with great pleasure that I start this webinar on sustainable finance and the ESG, why, how, and what. This is part of the MBA in Sustainable Management webinar series, and today we're having the second webinar with our distinguished guest, George Kell. Georg will be introduced by Catarina Roseta Palma, who is our Sustainability Director at Iscte. Catarina.
Thank you, Anna. So I'm the Director of Sustainability at Iscte. I'm also an economist, and I am a member of the faculty of the MBA in Sustainable Management. So it's with great pleasure that I accepted Anna's invitation to be here today. Also, I am extremely excited to be listening to what Georg Kell will be telling us. I will introduce you to Georg Kell, and I'm sure you will be excited too. So Georg Kell is the chairman of Arabesque. Arabesque is a technology company that uses artificial intelligence and big data to assess sustainability performance. So it's a sort of 2-for-1 of things that we need to be sure we have access to in the future. Artificial intelligence and big data, and also sustainability. Both of these are extremely important in the coming century for sure. The company works on these aspects in a way that is relevant for investment analysis and decision-making. Georg is also the spokesperson for the Volkswagen Group Sustainability Council, and he was the founding director of the United Nations Global Compact, an initiative that I'm sure most of you will know. That's the world's largest corporate sustainability initiative, in which Iscte is also very happy to be a part of through the Portuguese institution, which is the Aliança ODS. During Georg's career, almost 3 decades long now, although you don't look at it at all, Georg, he was working at the United Nations directly with former Secretary Generals Kofi Annan and Ban Ki-moon. And in doing this work, Mr. Kell worked on the UN Global Compact, building up and oversaw also the launch of sister initiatives such as the Principles for Responsible Investing, Principles for Responsible Management, which we here at the Business School try to implement every day, and the Sustainable Stock Exchanges. Initially, Mr. Kell was a research fellow in engineering at the Fraunhofer Institute for Production Technology and Innovation in Berlin. And then he had some years working as a financial analyst before joining the United Nations in 1987. He's a native of Germany, so he's a European, and he holds advanced degrees in economics and engineering from the Technical University of Berlin. Georg, you have the floor. Thank you so much for being with us today.
No, thank you very much. And thank you, Anna, for having me on this exciting program. I will try my best to download my experience and my knowledge about environmental social governance factors, sustainable investing, and related issues as best as I can. I think it's one of the most exciting topics the world is facing with, because at its core, it's about finding a new balance on fundamental questions of valuations, values, and how to go about. And it puts into question many of the assumptions we have held in the past throughout our industrial era. So I'm looking forward entering a dialogue with you, Anna.
Thank you very much, Georg. It's really a true honor to have you here with us for this webinar and to talk about this topic that is it's so important and crucial nowadays, especially in the week that we are just hearing about what is going on at COP26. But to start, I will ask a very naive question, which is, why do we need to be concerned about sustainability?
I think there are three reasons, three fundamental reasons. I often call them the irreversible forces that are reframing, reshaping the framework conditions within which business and finance try to compete and survive, but also where people and politics try to find a new consensus. The three forces in my mind are the following. Number one is actually technology. The world often forgets that human progress has always been shaped by technological change. And we are currently in an extraordinary era of convergences of different technologies that are fundamentally changing our behavior, our preferences, and business models, not only disrupting them, but also creating new ones. Technology is not only a fundamental force in shaping societies and the ability to create wealth, it is also a force that advances what I will come to in a moment, the sustainability agenda through the ability to create transparency, to measure, to establish new ways of assessing risks and opportunities. But number one is technology, and this is an irreversible force. It is here to stay, and experts all over the world agree that we're entering a new phase where the pace of change itself is accelerating. This exponential change is fundamental in many ways. We may come back later. It challenges many of our previous assumptions. The second irreversible force is natural boundaries. Humanity has entered a new era. We are now in an era where humans, through what we do, have become a geophysical force, meaning we are changing Mother Nature at its fundamental core, the air, water, soil, and how materials flow. And increasingly, we feel the backlash on that in the form of climate change, extreme weather, but also in many other forms, loss of biodiversity. So we are being forced increasingly to establish a new balance with the natural environment. And these changes that are behind the natural boundary changes are also irreversible, at least in the medium term. Even if the world were to stop now emitting any emissions, we would still have the accumulated emissions in the atmosphere and all the garbage in the oceans and all the destruction that has been going on already. So an enormous lag is still working on that. So we can assume that these changes are here to stay for the foreseeable future. So number two, natural boundaries. And number three is the more complex issue: how do societies and people react to these changes, to technological change and to natural boundary changes? And here we see increasingly worldwide, whether you live in a democracy or in an autocratic system, people want increasingly their own values to be immediately transacted. So they want to see action. They want to see their own preferences translated into something. So this third force on social change, social norm change, it plays out differently in different countries and in different age groups, but the common denominator is clearly people are instantly more demanding action on some of these issues I referred to, and they have increasingly also the means to express themselves directly. So the bottom line is we are facing a fundamental reshaping of the framework conditions themselves, which increasingly makes it necessary to take sustainability, environmental, social, and governance factors very seriously. They're no longer an add-on, a communications platform. They are part of a survival strategy now at the corporate level, at the investor level.
Mm-hmm. Thank you very much for this reflection. It's incredible how it links with the webinar yesterday. I was mentioning it to you, Georg, just before we went live, which was on digital transformation and as a driver for sustainability, and where we mentioned some of these challenges about the technology with environmental impact as well, and the role of people, because organizations are made of people, for people, with people. I should say people are all around, so we are all people in this whole story. And I know you're involved with that process as well in terms of the digital with purpose that we mentioned yesterday, and that you and your organization are related to that as well. Before we go on to the sustainable investment, would you like to mention something about this as well? So the link with technology.
Yeah.
And
yeah, I think thank you, Anna, for pointing that out. And I'm surprised that many people out there have not yet made sufficiently the connection between technological change and sustainability. It is clearly the most important agenda ahead of us. If we succeed in using digital solutions and technological advances to solve problems we are facing and to improve the state of affairs, then we really should be very optimistic. It's arguably the most important question for our future is, are we capable, and to which extent are we capable of employing digital solutions to advance and solve problems? I think it's fundamentally important, and many more and more corporates recognize it. That's why the purpose debate is so trendy these days, by the way. But also more and more of the R&D, research and development, goes into that space, which is a most welcome development, because they recognize through green technology, for example, we see venture capital is now massively increasing. We see digital solutions in everything we are talking about are key to finding answers. So I am a great supporter of digital with purpose as one initiative that addresses that head on. And my own firm is not only a supporter, but we also try to make a bridge to many players in the financial world that are also grappling with this transition. Let me say one point here, what we are facing in terms of structural challenges. We have to understand that the world has evolved in many small steps, and industrialization mindsets have shaped the world we are living in currently. All the structures and system, the methods, how we study, how we analyze, how we discount the future, how we assess, how we optimize and minimize, are all, you can argue, products of our industrial era efforts to optimize economic growth. Now we are challenged to find new answers that go beyond that, not throwing it away, but building on it. That means we have to transform, we have to move from industrial era mindsets and thinking into a future fit. And that is a huge challenge for many organizations, especially the established ones, which have, of course, in their own DNA, the industrial era thinking very deeply rooted, with many experts making a daily living on that. So you have to win over these people to move into the new world. The old world was just about optimizing shareholder value in the short run. By and large, it was an analog optimization issue. The future has to be digital, smart, and it has to have a purpose that not only advances shareholder, but also societal values. Environmental issues in the industrial era mindset are an externality. You tackle it through compliance optimization. That's what business schools taught their students and still are doing so. Just meet and comply with the law and you get away with it. And if you don't quite meet it, no problem, so long as the fine is not bigger than the foregone increase you have through non-compliance. The new thinking is support governments in shaping policy frameworks that support the new business models that not only internalize the externalities, but that turn them into an opportunity through green technology, through circular economy, shifting to renewable energies, and so forth. So the change from industrial era to future fit is quite big. We don't know yet what the name of the future model will be, but we know today already it has to be decarbonized, it has to be digitalized and smart. And from that perspective, I would argue decarbonization, circular economy, that's the currency of the future. And this is the way we have to move into, and we will move into. And ultimately, we may be forced by Mother Nature to do so if you don't do it fast enough.
True, and I'm glad that you raised the role of business schools and in general in all this journey, which is something that at Iscte we've taken seriously for several years now, and this program that that serve as an umbrella for these webinars is the latest example with this MBA in Sustainable Management, where we incorporate throughout the different disciplines of management, exactly because we don't believe that sustainability is something that some will do, but it's a role of everyone inside the organization. So I'm glad that you raised the importance and the responsibility that business schools have in this process. But now I'll then jump into the key topic of this webinar. We do see an increasing evidence of some sustainable investing, and you've already mentioned the what's behind the ESG that everyone is talking about, the environmental, social, and governance. So, how do you think that the sustainable finance in general and the ESG can be a driver for sustainability? Can you give us an idea, please?
Yeah. First, just a little bit of history. I was lucky enough to convince Kofi Annan in 2004 to invite asset owners to join a working group called Who Cares Wins. And this working group produced a report and coined the term ESG. In those days, very few people paid attention. But a year later, we launched PRI at the New York Stock Exchange. And the environmental social governance terminology is something that investors liked if they found it simple, ESG. So the reason for the uptake was actually simplicity initially. But not much happened, by the way, in the first couple of years. Remember, we had a financial crisis, 2008. Finance was more preoccupied with saving its own lives and fending off what they called overregulation in response to the meltdown. But it was in 2014, the first big studies came out, and Arabesque, the firm I joined in 2015 for that reason, was one of the first that did with Oxford University a meta-study that established a relationship between good ESG factor management on the one hand and long-term valuation on the other. Shortly after, many other studies came out from all over the world, and that's where finance started to really switch on 2015, 16, 17, from Wall Street to London to Shanghai, all over mainstream investors realized there's something in it. And what does it really mean? it means that finance is starting to recognize that there are non-traditional financial issues, environmental issues, social issues, good governance issues, which actually have financial relevance. If not today, then with near certainty in the future. The challenge, of course, is to get a handle on them and to kind of measure them. And that's where the disclosure issue comes in and the data issue comes in. And so far, the measurement of ESG factors, usually done through third-party rating agencies, is not satisfactory yet because it's backward-oriented, it has many gaps, and it is, of course, biased. So that's why a big debate has started recently on data quality and reliability. And my take on it is actually quite simple. One is the data landscape is rapidly improving. Why? Because thanks to technology, we can increasingly better measure and sort out what matters and what doesn't. This is where also AI comes in, by the way. My firm has applied very successfully AI for unstructured data, which is a key for integration. But secondly, also, we see regulators increasingly defining a minimum floor. The US taxonomy, we heard some announcement recently, the International Standards Board are created now trying to measure. Also, the traditional standard setters are pledging to collaborate more. And in the US, here in the US where I'm living, the SEC, my guess is they have already started working on related issues. They will also come up with their own interpretation, probably starting with emissions first. So we see three developments moving forward. One is improvements on the data landscape, largely thanks to technology. Secondly, regulators increasingly defining a minimum floor, meaning they will broaden the inflow of institutions and organizations that will feed data. So it will improve. That's a response to the criticism that is currently going around. Of course, this transition from externalities, integration into analysis and decision-making into a new model is not yet complete. We are still on a journey. And any journey that is a major transformation is never linear or smooth. It will always go up and down, and there will be bubbles, green bubbles that will implode, but new ones will come up. But the basic direction of change is very clear. These externalities increasingly will find their way into valuation. One big problem in finance still is the time horizon, the tragedy of the horizon, because finance still can be very short term. And it's still profitable to burn the globe. It's profitable to deforest Indonesian rainforest and sell precious wood. It's profitable. But because the pressure is so big and the uncertainty about when will these externalities be fully priced is so big that finance talks about stranded assets, for example, if you don't make the transition fast enough. So the momentum is pretty strong. So ESG is an imperfect substitute to transform finance from its old industrial era mindset into a future fit supporter of the transformation. But in the absence of clear benchmarks and clear rules of the game and clear policies and a level playing field, it will stay messy for quite some time. But nevertheless, very important because it's a bridge into the future. It allows a better handling of risks that are out there, and it allows to focus on long-term success. So I'm quite optimistic that the ESG movement will continue to grow, and over time, it will become the new normal. Remember, ESG from the beginning was conceived or thought of as integration of externalities into your own analysis and decision-making, meaning you don't create something new, but you change the existing one by taking on board what increasingly matters. And that's what integration means. The parallel for that trend is at the corporate level, where sustainability increasingly is part of strategy and decision-making at the top. And that's integration into the mainstream business model. The same is happening in finance, where ESG, analytics, and data increasingly become part of the new normal.
Can I ask a question? Is that okay, Anna?
Sure, Katarina, jump in.
So I was listening to Georg when you talked about the tragedy of the horizon, which is a term that I found very interesting. In economics, some of my French colleagues talk about the dilemma between the end of the world and the end of the month. In the case of the consumer, so the consumer is facing decisions that he or she knows that have consequences, immediate consequences for your budget, but also consequences for the environment. And it's obviously everyone cares about climate change. Everyone cares about biodiversity. If you ask people, they care. But then the end of the month comes first. The end of the month arrives earlier than the end of the world. And so it was interesting to me to hear you talk about the tragedy of the horizon for the firms. In Portugal currently, and I'm not sure if this is the case in Germany, I'm wondering, we're facing a very similar dilemma at the policy level because electricity and energy prices generally have increased very much. And so people were complaining, and the government was worried that we have elections coming up and everything, and the government was worried, and so they decided that they would subsidize fossil fuel prices for a while. And so I'm wondering, what can we do? I mean, we know that this is something that we have to transition. We have to transition away from carbon. We have to transition away from fossil fuels. The people deal very badly with quick price increases that affect their bottom line. I'm thinking of consumers, but of course, I'm sure you would say it's the same for firms. How do we handle that? Right.
It's one of the most big challenges. By the way, I live in the US, and the situation is very much the same here. Last September, I published a book, a co-edited book, Sustainable Investing, A Path to a New Horizon, where Tragedy of the Horizon with the foreword by Mark Carney was the catchphrase under the title. And we reflected on this dilemma quite a lot in some of the chapters. I'm not saying there's a golden, a silver bullet answer to your fundamental question, but basically, I think three things have to happen, and they are happening to some extent. One is, ultimately, we of course need policy frameworks that support long-term behavior. And that's why carbon pricing, for example, is so important. I hope there's more progress on carbon pricing everywhere. I'm supporting a few initiatives globally, including at COP26, call on carbon, for example, now signed by hundreds of executives. But policymakers are slow. They're still subsidizing fossil fuel. Remember, subsidies for fossil fuel are still estimated at around 1 trillion by the IMF, which is much more than the world invests in renewable energy. So we haven't gotten it right at the policy level. So that is number one. And we have to switch the policy frameworks and the incentives to favor long-term good behavior and not reward bad short-term behavior. Secondly, I think policymakers by and large have also failed to really tell the story about transformation. They always want to please short-term. Oh, you have a little problem on your knee, we come here, we help you. But what's wrong with the body overall? They don't mention it. So I think policymakers have to become honest and transparent that we have to embrace the transformation and we all have to make changes. It is just not feasible to say, oh, you don't have to worry, everything will be the same. You can have your cappuccino in the morning and fly for a coffee in the afternoon to Venice cheaply. No, we will have to pay for emissions much more. And that is right so. And it's the only way for healthy survival. There will be other alternatives, much healthier ones, and probably more enjoyable ones, which we will discover on the way. We need a narrative for policymakers to become honest and tell the truth about it. Tell President Biden, he is at COP26 and tells the world and claims climate leadership. At the same time, he says at home, I want to make sure the prices at the pump stay low for American people. That doesn't add up. Yeah, there's no honesty behind this. This just doesn't make sense. So that's number two. Number three, investors, of course, are very risk sensitive, and they do know that there is a real risk in carbon intensive investments. And nobody can predict at what point in time these risks will materialize. Already we see it in the impact of insurance companies around the world on extreme weather and others. So there's a heightened sensitivity about these long-term risks. So investors are increasingly cautious about short-term exposure to high carbon risks. So the risk balance is shifting, and that's the good news. But reaching individual people, I agree with you, it will remain an uphill challenge. I think we have to become honest and simple and face the simple facts that change always requires an effort. And I'm sure if you tell this honestly to most of the people, they will actually understand, and they will actually remember that our grandparents practiced sustainability. They practiced circular economy. They didn't throw away things. This garbage behavior only came in the 60s and 70s with mass production. So ask your grandparents, and they will teach you how to practice circular economy and how to reuse, and what the importance is of quality and sustaining a healthy environment. So I think most people would be open to that, and they would understand. But it's this fails easy go that politicians like to do, because politics has become very populistic and very reactive, and they just check on the popularity index of the last 12 hours, rather than having the courage to look into the future and tell the story. That's kind of my obsession currently, because I follow politics in a few countries, and it really, even in Germany, I may say, where the Green Party now is negotiating, the Green Party has failed to be honest about transformation. They didn't tell the real story. Sorry, my green friends over there, but you fell into the same trap as the populists. And it's just, here in the US, it's even worse. I gave you one example. I could give you many more examples.
Mm-hmm. Thank you very much, Jörg and Katarina, for jumping in with such an interesting question. So it's clear the role of regulation of politicians, and Katarina has made the link with the final consumer in the end. But if you think about the companies now, which are somewhere in the middle of all this, I would ask you, Jörg, what can companies do to boost sustainability through the sustainable finance and the ESG? What can they do, and what are they doing, in fact, from your experience?
Well, there's actually some real good news. At the corporate level, for example, the Science-Based Target Initiative now has more than 1,000 of some of the world's largest companies. They're quite serious about decarbonization. Finance increasingly assesses valuation, long-term valuation, on the basis of corporates managing the transition. So they want to know what the transition plans are, the technology plans, but also the sustainability decarbonization plans. And look at green bonds. More and more corporates discover that actually financing through green products is actually has advantages. You get more favorable terms and so forth. So I think we have a good momentum going on between finance and the corporate world, which in many regards is ahead of what policymakers are doing, by the way. Yeah? So at this point in time, in many markets, the private sector, both sustainable investors and corporates are ahead of policymakers. But they need the signals from policymakers to have certainty, especially on carbon pricing and related issues, because otherwise these decarbonization pledges cannot be fulfilled. Corporates would go bankrupt if they did it in the absence of policy changes. So in my understanding of voluntary market-led initiatives, and that's what I've been doing the last 3 decades, basically, pledges, commitments are good, even if imperfect, even if there's some greenwashing here and there, because they change the narrative, because they lead in many instances to some real measurable impact, which is nice. Every ton of emission counts. But most importantly, I would argue, they help to prepare for policymakers to make the big systemic changes. Because in the end, systemic challenges need systems solution. And we cannot go to scale unless we have systems solution. So that's why I continue to support voluntary initiatives. I think it's important. They prepare the ground for, they make the arguments, they change the mindsets, and they make it easier for politicians than to carry out what they have to do.
Mm-hmm. Thank you very much. And this leads us to the multi-level of sustainability approach. The I level, what can the individuals do, and as consumers, as citizens, and so on, as business people, which are people in the end, we as organizations, as institutions, and then what has to be done at the systems level. This is an approach that GRLI, the Globally Responsible Leadership Initiative, has been using, and that we as members really try to think like this, because indeed, as you were saying, that there are changes that need to be done at the systems level. But in the end of the day, we are all people, and people together and organizations make that system. Yes, Katerina.
Another thing that I was thinking, listening to you, is there's an issue also with the quality of the information connected to the fact that it's voluntary. So one thing is national statistics that are compiled in a way that is methodologically relevant and supposedly equal for all countries. And then there's the voluntary initiatives, which are, of course, very important, as you said. But here, I think it's also important to mention that one of the aspects where the leadership of the policymakers is essential is in the definition of indicators, how there should, and methodologies for these indicators, because otherwise, the Carbon Disclosure Project is super interesting and we get a lot of information from it. But of course, the data from the different companies does not add up. We can't take that data as being a good representation of, right, the national data or whatever. So I just wanted to add that and see if that.
No, that resonates with me 150%, if I may say so, Katrina. I think I alluded to it quickly before, but I want to go a bit more into detail. First, at the market transaction-based level, that the importance of quality data is really recognized now by sustainable investors in particular, who are fed up with third-party assessments that are backward-looking, biased, and imperfect. So there's a little revolution going on right now. And my own firm, actually, on 1st of December, we launch a new platform that tries to tackle some of these shortcomings. And sorry for making a bit of advertisement, but we act based on that. The basic trends here are at the market-based transaction level are the following. There's increasingly an emphasis on raw data, uninterpreted raw data as a basis of analysis. So no longer rely on third-party assessments, but rather use raw data as a basic input. That's number one, yeah? Very important. Secondly, also use increasingly data that went through some notion of assurance, yeah? And assurance is a wide term, but increasingly ESG data is increasingly subject to assurance providers, third parties. And that is happening in different jurisdictions at different levels, but the trend is clearly going in that direction. And then thirdly, very important really, because sustainability and the transformation is messy. There's no way out, yeah? There is no linear planning that tells you exactly what will be the valuation next year. No, because it's a messy world. So it's increasingly important to have really top abilities to assess what we call unstructured data that is maybe relevant, but the relevance of which needs to be really identified and justified and elaborated. And that you can increasingly do because there's so much unstructured data available. But to meaningfully interpret that goes beyond analysts, you need artificial intelligence. So there's huge progress happening. And that's important for investors who don't really care whether there's anything else, but they want to know that the data they're using is reliable and predictable. So the various assumptions they're making, the strategies are underpinned with correct data. So there's progress happening actually faster than most people realize. It's quite exciting, actually. However, at the state level, at the country level, and then at the COP level, as we see currently, one of the big pending issues is exactly agreement on the rule book. Even the most fundamental aspects of how do we measure carbon and how can we give credits to offsets, the world hasn't agreed yet. Imagine that. This is the year 2021. I can't believe it. I remember, well, I'm getting too old. I remember Rio 1992. That's how my journey started. And I'm getting impatient. So governments, for all sorts of reasons, have not yet agreed on some of the most basic taxonomy on how to measure emissions. This is disgraceful and really bad. It shows that governments really are operating on the basis of lowest common denominator, and they're not doing humanity a service. I hope they will come up with an agreement by tomorrow. To me, that is a key point on Article 6 in particular. So progress is very slow, it's uneven, but it's happening fast. And again, technology is a great enabler in helping us to find a way forward. So I'm a little bit optimistic on the market side, because I know the progress is phenomenal with AI in particular and analytics. And investors increasingly want to have reliable data. Now, that is proprietary data, mind you, and that's the problem, because I believe that ESG information ultimately has to be a public good. And my firm's new product will actually challenge the existing data infrastructure by making the ESG data publicly available, because we think that is a key driver. In the absence of public availability of ESG information, we cannot really arrive at systems change. It will stay the prerogative of those who have the mathematical and the computational capabilities, and they will use it as a proprietary competitive advantage. But if you want to contribute to the big systemic change, I think ESG information should be a public good. Accessible.
George, can you maybe just give us a little bit of a sneak peek? Can you give us like an example of a type of data that you think really should be public and that you're thinking of making public?
Well,
is that
we
possible?
are committed, yes, a little bit. We will make available all ESG data which we will collect. We have already for 8,000 companies, and 4,000 more are coming, and more additional information is being fed in. So all that information will be made available publicly, free of cost for anybody. I think it's really key to make that information. Now, that will not solve all the problems, because it doesn't solve some of the fundamental measurement problems you referred to, and some of the taxonomy issues that haven't been sorted out yet. I'm a little bit optimistic that in the near or medium term, the world will agree on emission measurements. I think at least on emission disclosure, we have to find an understanding how to measure greenhouse gas emissions. And I know the European taxonomy is very complex, but I hope that focus will increasingly be on greenhouse gas emissions as a first step, because we have to start somewhere, and we cannot make the world perfect in one go, but we have to start with what matters most. Good news is also here in the US, the SEC is starting a working group, and my guess, having studied American pragmatism for now 30 years, my guess is they will actually do first what's most important and then go for the next step, rather than shooting at the perfect solution from the beginning and then getting stuck in implementation. So I hope Europe will play along there and also focus really on what matters most first, more than on all the other important issues, which are of course all important.
The perfect is the enemy of the good, we say.
Yes, I think that's quite correct.
That's exactly what I was about to say, Katerina. Yeah, and Georgi, you've raised several of the questions that I was tempted to ask already, which is very good, because it shows how they are connected. The challenges with the European taxonomy, what can we expect from COP26? So you've approached it, which is great. I would.
Well, Anna, allow me to make one point. You asked about COP26. I've been to almost all COPs. I didn't go to Glasgow this time. I decided, because I'm also getting older, but I knew from the beginning, and so did many others, that COP26 couldn't be the success many wanted it to be, for three reasons. First, we can only successfully tackle climate change if the US and China were to collaborate. If big powers don't recognize that climate change is a security threat for them, and that they have to put collaboration in tackling it above many other issues, we won't get anywhere. So big powers govern the world. Its power still trump markets, by the way, in all respects. The role of politics, we talked about it. So I think priority number one has to be for the US and China. There's great news yesterday. They signed a little side agreement, but it's just a face saver. It's not substantive, and it didn't feed into the COP26 process itself. So there's hope, but there hasn't been delivery yet. Yeah? European Union, I'm sure, is ready to stand by to help, as was the case in 2015. 2015 Paris Agreement was only possible because smart French diplomacy, admittedly, good European support overall, but primarily because the US and China decided ahead of the conference that they will collaborate. And that created all the momentum. The UN just was the stage. It wasn't the doer. It's big power that decides. So number one is big power has to agree on the priority of climate action. It hasn't happened yet. Number two, and that's the issue we discussed before, politicians are still fooling themselves. They want to have it both ways. They want to be populist at home and play statesman abroad. They have to start telling the true story about transformation, and they haven't done that yet. And until they do that, I'm afraid all the commitments will be half measures, and we will always be in this battle of it's not enough, and we said so, and pledges ahead of delivery. So we have to become honest and truthful about this. That's number two. And number three, it's more speculative, but that's the upshot of the growing awareness. There's increasingly economic opportunity in the green solution space, and it's big. It's becoming bigger than the established industries. The moment green tech is bigger than gray tech, we have won the race. They will kick out the lobbyists in Brussels and in DC. I mean, we still have more oil and gas people in Glasgow than renewable energy people. Apparently, there were 500 oil and gas people are in Glasgow. It's the biggest delegation of all, by the way. No country has 500 people there. So it gives you a measure of the lobbying influence and corporate capture overall. Yeah. But the moment green tech is so much bigger than gray tech or black tech, whatever you call it, then obviously we have the tipping point from within. So there are good market forces at play, and digitalization is playing into it, smart solutions, the industry coupling effects, by the way, we didn't talk about, are playing into it. Increasingly, companies are collaborating because new business models are emerging on energy storage, where automotive industry works with utilities, and so forth. Just one example. So there's good hope that market-led forces around solutions are increasingly becoming really drivers, and they also can shape policymakers then. Once more employment is around, much more employment is around the green tech than about traditional, then we will go for that. So there's optimism. So these are the three reasons, and none of the three criteria outlined for successful climate action are yet fulfilled, but we have to work towards it. US-China, politicians at national level being honest and truthful, and third, the growth of green tech and sustainable finance.
Definitely, the fact that, sorry.
Being a tipping point, being bigger than.
Mm-hmm. Yes, sorry for interrupting you. But indeed, we are seeing different regions moving in different rhythms, and if I would ask you to, in a short note, say, how do you picture the future? If you've explained and you've put it very well, different rhythms, and some of these regions have, of course, a huge responsibility in all this, and also a very important role. But how do you see the future in terms of these different rhythms?
Messy, very messy, uncertain. With lots of pockets of opportunities, but lots of risky spots around. A friend of mine just published a book, and just around climate change, he sketches 3 future scenarios which are well known. One is obviously the hothouse world scenario, shocking, terrifying. One is managed transition, and one is fragmentation, because policymakers at some point will be forced to ban. He calls it the ban economy. My hope as a multilateralist, I know that we are interdependent worldwide. The old idea of national sovereignty is still driving power concepts, but the reality is we are one globe. This human species, its survival and its future wealth and happiness will depend on its ability to collaborate. There's no question around it. We saw it on COVID, on health issues. It doesn't help you if one country is totally safe when the virus is mutating elsewhere. It will continuously be a threat. It's the same with climate change. Even if a region is making huge progress, but the rest of the world doesn't, global warming will accelerate with or without that action. So we need to work together. And third thing is also on, but where I'm currently really frustrated, because Homo sapiens, have you learned from history? Again and again, I'm discovering we find it difficult to learn from history, and we fall back into our old mistakes and our old mindsets, and the myths of the past still give meaning to our lives, if you so want. And being enlightened about the future is a nice vision, but so many people are just not yet there. We just have to keep up the good fight, I would say. Principle, hope is always stronger than fear. So we need also a new whole narrative about the future, which hasn't been produced yet, amazingly, something people like to believe in. So the transition is not just a big pain of foregone some consumption behavior, but rather the promise of improvement. So we need to work on that. And then I also hope that on the power side, because the biggest threat is still on the security side, where a new Cold War is in the making. I really hope that the notion of power will also increasingly understand that collaboration has a premium. We need a new definition of global public goods. There's no understanding in foreign policy circles around public goods, global public goods. We need a whole new theory for foreign affairs. We are still operating on the same principles as 2,000 years ago, which Thucydides defined us: be stronger than your enemy, or as Stalin would say, kill your enemy before he kills you. That's the thinking, and that's where the big military expenditures are going into. So that kind of thinking needs to modernize as well and recognize global interdependence and the fact that we have a common enemy now. The common enemy is actually us. The enemy is us. It's our own inability to change. It's our own inability to constrain ourselves. It's our own inability to secure peaceful coexistence. So we have to, there's just no way around. Yeah. And what can we do in the meantime? The work you're doing is very important. Open up minds, make bridges, make the connections, foster a holistic understanding, a systems understanding, and above all, create the encouragement to embrace change and not to resist it. Explore, rediscover the joy and the beauty of building and creation and doing things better. So this drive to positive performance, I think, is very important. And that's what education is so important for.
Thank you so much, Jörg, for these signs of hope and for these important messages that you've shared with us for the last hour. The time just flew, I must say, and it's with a lot of joy and honor that we talked with you during this webinar. Katarina, I'm sure you share this pleasure. Thank you for being here today as well, and we'll keep on talking about these topics, and the bridges are made, and we'll keep building together for a better future. Thank you very much for being with us, and see you sometime, and thank you for all that have attended this webinar. See you in the next one. Just wait for more news. Thank you.
Thank you, Anna. Thank you, Katarina. Pleasure.
Thank you.